Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. And as usual, I'm recording this late Friday morning, March 31st, last day of the first quarter. So it's been a pretty good week. As I record this, the major indexes are up maybe 2 or 3% on the week. We've seen a little bit more strength among the beaten down areas, some defensive stocks, but there was a little rotation earlier in the week, so I'll keep an eye open for that. But I wouldn't say it was some big week of rotation at all. It's pretty much everything gradually moving higher. That said, at this point, we have seen improvement, but at this point, it's still kind of this in-between market where on one hand, you have the broad market, small caps, mid caps, financial stocks, commodity, just a lot of stuff. If anything, it's kind of, quote, overbought. I'm not a big overbought guy, but overbought in an intermediate term downtrend, okay? On the other hand, you have even the big cap indexes, even the S&P 500 is hanging in there. The NASDAQ looks pretty good, the unweighted NASDAQ, and a lot of individual stocks and sectors on the growth side of the equation are hanging in there pretty well. Not that they're shooting, they're not rising 10% a week, but they're doing pretty well. So, you know me, I like to just go with the evidence. I want to be on the horse when it takes off and runs a mile straight. I'm not trying to time every single wiggle in the rodeo. At this point, we're about half in cash in Cabot Growth Investors model portfolio, but we have, on the other hand, we've nibbled on 3 names here. Ideally, we get a foothold in some new potential leaders, as well as owning some from January, and the market takes off. We average up, and we're all drinking umbrella drinks here in the summer while the stocks go up. We'll see how it goes. Right now, I think it's just key to be flexible. I like where we're at in terms of this sort of 50-50 situation in the portfolio. But let's see. Like I said, there's often reverberations from financial issues like we saw with Silicon Valley Bank and stuff like that. So it wouldn't surprise me if there's another cockroach or two that comes to the surface in the next few weeks. On the other hand, after a terrible, terrible year, really leading the bear market lower, we're definitely seeing resilience in growth stocks, which is kind of normal new bull market type behavior. I'm not going there yet, but we'll see how it goes. Right now, I think playing it halfway makes sense, and then keeping an open mind going forward. Okay, let's hop into the charts. As usual, I am using MarketSmith, product of Investors Business Daily. You can learn more at marketsmith.com. Now here's the NASDAQ. Okay, you can see it did pull back into whatever that was, the financial panic low, but it's really snapped all the way back. Now, yes, some of that is the Apples and big, the mega caps of the world. But it's not all that, okay? But either way, I mean, the NASDAQ is still important, and we're closing in on, the highest close here during the January rally was just above here. And really going back, this would be, the highest level since last August, if it can keep going. So it's pretty interesting. Another thing, this is very short term. And I just want to kind of get this stuff out of the way first, because it's not really what I focus on. But a few days ago, we kind of had sort of a nasty reversal. The market had gone up a few days. I think there was some good news. We gapped up. Things were looking really good, and then whoosh, okay, and financial stocks got hit. But instead of just kind of coming back down here, you can just see the NASDAQ and really the entire market held pretty firm in here the next few days. And of course, the last few days, we're kind of gapping up here. I mean, it's pretty constructive action. Obviously, the NASDAQ is the strongest index out there, but it's fairly constructive action. More important to me is just it came right back above the 50-day line, which is this orange line, and obviously is stretching higher. Looking at the rest of the indexes, the S&P 500, it's not the be-all, end-all here. It's not, really, it's above the 50-day line. The 25-day line is curling up. So by our measures, it's intermediate term positive. Not leaving your brain at the door. We're still kind of in this range here. But, all in all, if someone had said to me 3 weeks ago or whatever it was, said, hey, the S&P and the NASDAQ are going to be around these levels, but we have this bank crisis and all this stuff, I'd say, and the Fed's going to hike rates again and all this, I'd say, I'll take it. Okay, so far, so good. The quote problem is that you're still buried on a lot of this stuff. This is the IWM, which, small caps can dance to their own drummer a little bit, but you can just see it really hasn't even bounced. I mean, it's bounced here in recent days, but net, it really hasn't gone up at all since the kind of the mini meltdown here. Other stuff is a little bit better. This is mid caps, MDY, but you can see it's just back up to the 25-day line, still well below where it was 5 weeks ago, which is kind of a marker for us. And the New York Composite too, a little bit stronger above the 25-day line, but still in this sort of intermediate term downtrend phase. So like I said, it's sort of a push-pull. We'll see how it goes. I've learned through the years not to just ignore the broad market, because if there's another leg down in financial stocks or stuff like that, guess what? these things that look good can go bad in a hurry, even on the growth side of the equation. But, you know, I can't ignore the action of a lot of growth stuff in the growth indexes either. So hence the sort of halfway in, halfway out, okay? Just to show you a bigger picture of it, I mean, here's the XLF. Again, this looks like a lot like the small caps, which I think do have quite a big financial weighting, the IWM. But the XLF, you know, really no bounce at all, again, since this, you know, 4, 5, 6 day meltdown we had a little while ago. KRE's commercial bank. Of course, this is the worst of the worst thing. But again, you had basically a crash. And just no, I mean, you're even hitting lower highs here on a daily basis. So even though the market in recent days has been sort of doing this, even when you're looking at small and mid caps, you know, regional banks are still, you know, obviously big investors aren't believers anyway, okay? Doesn't mean the market can't go up without this stuff, but you'd like to see it at least kind of get off its knees, okay? And then just, you know, I don't have great commodity indexes, but there's a lot of sort of cyclical stocks that are, a lot of them are okay. They're kind of hanging around the 50-day line, but this is Nucor. Just to show you, you know, it was kind of acting well. You know, it's had these dips before, but it was acting well in here. And then you have this big break, which is one thing. And now it's just kind of nudging higher. Can it accelerate higher? Sure, it could, and I'm all for it. But at this point, just looking at it, you know, certainly not a lot of buying here after that. And you can go through, you know, Arch, this is Arch Coal. You know, it had this sort of big, long base. If it got going, big cash flow story, all that. But instead it kind of broke down, not the end of the world. It's still kind of within this range, but on the daily chart, you can just see, you know, big break and just kind of walking the plank, so to speak. Freeport McMoran, you know, again, not awful, but big correction. It has rallied, but again, you're kind of right into resistance here. So I think the next week or two will be key because, I mean, you do have sort of, like I said, this overbought into intermediate term resistance for a lot of the market. And if that leads to some selling, that would be kind of normal if it's some selling. If it leads to a meltdown, that would be bad. But obviously, if the market ignores it, I would use it, you know, as a feedback mechanism on the positive side. So just something to watch. I'm not saying to anticipate, but I just think that's worth knowing. Now, the other thing I would just mention is, I mentioned there was a little bit of rotation earlier this week. I'm not saying it's a big thing, but I'm just keeping an eye open. This is SMCI Super Micro. Looks fine. It looks fine. Nice sharp pull, not nice, but, you know, a sharp pullback into sort of the breakout area of 100, so to speak. And it looks okay, but, you know, we have seen some of these things all of a sudden lose steam here while some of the XLPs and XLUs have gone up. Arista Networks was another one. Again, looks totally fine, but starting to get a little bit of weakness in here. We have it. We're holding on in top 10 trader. Just something I'm sort of mentally noting. Meanwhile, while that was happening, you do have, this is XLP. It is starting to kite higher a little bit. Now, relative to the NASDAQ and the unweighted NASDAQ, it's not like it's kiting higher more than them. So I'm not overly, you know, flagging it. But just something I've noticed. XLU, same sort of thing. This is utilities. Very short term, you know, kind of coming up here. So I'm just sort of looking at this, keep an eye on it. But, you know, to me, it's all pretty normal so far. On the growth side of stuff, as I pull up my notes here, I like to look at, I've been looking more and more, at the QQQE, which is the unweighted or equally weighted NASDAQ 100. Not quite as strong as the NASDAQ 100 weighted, but pretty strong. You can see, I mean, if this was an index of itself, it would still be the strongest major index. And down here is the relative performance line to the S&P 500. And you can see that even the S&P, which isn't, you know, that bad, it's the highest it's been relative to the S&P in, I mean, going back to at least last spring. Okay, so that's a pretty good sign. Chip stock, same sort of thing. You had a little bit of a dip here earlier this week. Like I said, a little bit of rotation, but a nice snapback to new recent highs. Even like this isn't my favorite ETFs, but this is IGV. It's a big cap weighted software index, or software ETF, I should say, but new multi-month highs here. Even something like HACK, HACK, which is cybersecurity. So you can just see obviously where the action is. I mean, if you go through stock by stock, you're going to see a lot of broad market, commodity, financial type stocks. Industrials look somewhere between okay and not great. And if you look at sort of most growth stuff, medical is mixed. But if you look at most other growth stuff, it looks pretty good. So it is what it is. It's, you know, that's where we're at right now. Diving into names, and I do have a lot of them, so let's just run through them here so the video doesn't go a half hour. HubSpot, I've mentioned these before. We're starting to see some fallen angels, as I call them, reassert themselves. Relatively few. Most of the fallen angels I don't think look too good. I'm sure they'll do okay if the market really kicks into gear, but I'd rather focus on newer stuff. But HubSpot is one of these fallen angels that did have a long bottom, saw a bunch of accumulation, very calm consolidation here, and now is hitting, I don't know, its highest level since last April or June or something like that, April or May. Not overwhelming buying, but just flagging it. New price and relative performance highs look pretty good. Fortinet is one of these cybersecurity plays. It's not one of the dynamic ones that was really super hot at the end of the last bull market, but obviously it was a leader. You could see it really did well. Really didn't pull back all that much. I mean, relatively speaking. And now it's really changed character here, been stretching higher. We had this in top 10 a couple weeks ago. It's off to a good start. OKTA was an old favorite of mine. We had it a couple times. It's got, this is OKTA, cybersecurity. Again, fallen angel. It's not, I prefer the ones that kind of come out here and bottom out for a few months just to kind of wear people out as well as scare them out. Sometimes you get these sort of moves up and then they come back down. But there's no question that the stock, number one, has been rallying here since November. So 1, 2, 3, 4, almost 5 months now. That's pretty good. It's not like just a couple months. And number two, since this earnings gap, a couple of big volume days on earnings, it's acted very, very well in here, barely pulled back during the bank thing and looks pretty proper. So cybersecurity, there's a couple names in there. Palo Alto Networks as well, looks pretty good. So maybe that's an area that can kind of reassert itself. IoT, this is Samsara. I mentioned this before. It's had a huge, again, this is an IPO, kind of bottomed out. It did have a huge run. I mean, from the bottom to here, went from 9 to 20. So it might need more time than just a month here. It might need to futz around. But overall, big volume gap, more than 10 times volume, normal looking pullback, trying to reassert itself. Does it go up? Does it come back down? I don't know, but it looks proper. MBLY, I go back and forth on this one, MBLY. Great long-term story. It's definitely it's $30 billion, $35 billion market cap, for better or worse. But it's big, it's big and liquid, relatively liquid, so institutions can play it. It is very choppy, which isn't unusual for an IPO. But it's pretty much held this prior support level. It's been holding. Every time it kind of gets to the 50-day line, it bounces, which tells me that some institutions are supporting it. Somebody's supporting it. The weekly chart, again, it's a little sloppy on a week-to-week basis, but still kind of in this general uptrend. So I kind of go back and forth. I do really like the story. I like the pickup in volume this week. Not that it's dramatic. I'd love to see it settle down and just do nothing for a couple weeks, and maybe it presents sort of a tighter thing. But anyway, it looks pretty good. Impinj, this is another one we mentioned it sort of back here on the earnings gap, and I've mentioned it on the video a few times since then. It's choppy. It's a little thinner on a day-to-day, week-to-week basis. But you can just kind of see, if you kind of back out, this is the RP line, just kind of looks fine. And every time they try to hit it again, they do hit it here and it finds support. They hit it here, it finds support. So somebody's in there buying it. It feels like maybe there's some traders that are selling up here. Who knows? But, it's one of those things where you wonder if the market's ready to go, whether this one's ready to have another leg up. So that's PI is one to watch. Intracellular Technologies, great name, ITCI. They have a new depression drug. We were talking about it back here, but of course the market wasn't ready last year. And it just kind of slowly sort of bled out a little bit. But they had some good news this week, good volume accumulation. I'm not one to buy these things on news or rumors. There's still resistance, but just kind of flagging it is kind of an interesting story. Big gap here on news and, down a little bit since then, but certainly not unraveling. So we'll see how that one goes. Switching gears to a few different areas. Boeing, aerospace stocks, okay, not great. It's just interesting. The stock had a big run here. Earnings weren't great. They're going to be kind of break even this year, although their free cash flow is huge. But really, it's just gone straight sideways here, the last couple months, and maybe it just needed this time to digest. And now all of a sudden this week, the stock is, like the market, just kind of perking up day by day, nothing dramatic, but day after day after day, kind of pushing higher. It's right into resistance like a lot of things, but Boeing kind of intrigues me as sort of a mega cap, non-pure growth sort of a turnaround situation, because when these things trend, they can really trend for a few years, okay? PagerDuty, PD, this was in top 10 a couple of weeks ago. Again, kind of a fallen angel. Wasn't a huge leader, but choppy in a turnaround, but nice reaction to earnings just a couple of weeks ago. You can see here held firm and now, pushing out to higher highs. So we'll see how that goes. Align Technologies, this was an old favorite again. Not to focus too much on these former leaders because the newer IPOs of the past 2 years probably where you're going to get leadership. But ALGN had a huge run, did bottom out, big rush higher, and now you have this, I don't know, call it a 2-month sort of flag or whatever you want to call it, but basically a 2-month nice consolidation, just down to the 50-day line, quote unquote, just down to the 50-day line, support at 300. Might not be a bad risk reward here, not a ton of buying yet, but certainly looks proper overall. And then this one, I know you guys love $1,200 stocks, but it's a great chart. This is Mercado Libre, which is the big sort of payment processor sort of thing out down in Middle and South America, Central and South America. Nice, really bottomed out here back last summer, had sort of this extra little base in here, got going at the beginning of the year, but we've seen what happens the last couple months. And so now you kind of have this, this is what you often see is this, not to go on a tangent, but you get wiped out and then you put in a low. Then the stock will form kind of a first consolidation. And sometimes it can just go from there. But a lot of times it will go, and this consolidation itself is sloppy, which let me just, this consolidation was 31% deep, not terrible. But then you have this, volume accumulation in here, gets going, but the market's not ready again. So now it's just spent, I don't know, 2 months in a 13% range, okay, which is nice and tight. And now the stock is trying to get going here on the daily chart. So we'll see how that goes. Okay, a couple more just run through. Academy Sports, I think I've mentioned this before. Not going to be a cocktail party stock in terms of bragging about it, but just kind of a nice IPO breakout. And it's just been crawling higher along the 50-day line. You got to watch these things. Sometimes they can break, but earnings are out of the way. There's buying, earnings look good, so on and so forth. And it remains, as opposed to some of these others, it just looks nice and tight in there. Of course, it's not a go-go stock, so it's going to be a little tighter and more well-controlled, but ASO looks good. And last but not least, just going to mention China again. There were some really good vibes from China for 3 months or so. Then we started to chop around. Now we're starting to see some stuff. We'll see if it persists. I'm not going there yet, but I'm just sort of mentioning this is BIDU, BIDU. They've been in the news. They have AI stuff or whatever, but nice run here, pretty choppy, but on a percentage basis, 130 to 160, and a nice run here. You can see the volume accumulation down here. Backed off a little bit this week, but overall, a thrust higher from here or another week or two would be kind of interesting. Alibaba came out with some announcement of, I think they're splitting into 3 companies, so huge volume. It's still a big liquid stock, huge volume here. You can see it's not the typical. I would prefer it sort of up here and then maybe it backs off, but just kind of noting it whenever I see a big liquid name show this sort of volume on the upside. Again, you kind of have this initial rally, then you have this secondary consolidation, just kind of noting it. Let's see what happens. And then possibly more actionable, up to you, this is Wynn Resorts. Las Vegas Sands is a little weaker, but same sort of thing. Very persistent advance here. And again, some of these things that kind of got going with the market as opposed to waiting for January, they kind of got going in October, November, or at least off their lows. So they kind of have expended more energy. And net, the stock has basically done nothing here for 2 months, just like a lot of things, okay? But overall, it looks fine to me. Maybe you're just waiting for more strength, but I just look at this. My main takeaway here, the reason I mentioned it is it's been 2 months here and the stock has given up nothing. China tensions, financial crisis, and all this. And this is after, a big run, so to speak, to multi-month high. So to me, the longer this, and I'll just mention Las Vegas Sands. Sands is a little bit weaker. Market Smith doesn't want to pull it up for me, but Sands is a little bit below the 50-day line, but still the same sort of general pattern, which is just a nice tight, there's Sands. You can see it's right on the 50-day line. Just a nice kind of quiet consolidation, relatively speaking, 10 or 15% after not doubling, but close, up 80% or something. To me, that's pretty proper. So I would just be keeping an eye on those. I would be surprised if the Macau, Asia gambling reopening story is just over and done with. But it might be over and done with for another month or something in terms of the stocks. But my guess is the next big move on these are up. Okay. Now back to the market again. You can't. I just learned through the years you can't underestimate when you have a weak broad market, especially financial stocks, because, you know, we come in next week and KRE goes down 10% or something like that. It's gonna cause some jitters and cause some selling and maybe cause some profit taking in some of the resilient stuff. But I also can't ignore, you know, even if you look at this QQQE, which is just an equally weighted NASDAQ 100. So it's big cap, but it's not all Apple and Microsoft and Google. And I mean, it just looks ready to, I don't want to say it's ready to get going, but it definitely looks like it wants to head higher if the rest of the market can behave itself. So overall, I would say I'm definitely more optimistic than not. I just think the setup is there, the sentiment, it's been a year and a half since the NASDAQ topped out, recession worries, financial crisis, but suddenly you have a lot of growth stocks outperforming, holding up well. You have some fresh new leadership names that aren't the same names we were talking about a year or two ago, a year and a half or 2 years ago. So I think the setup is really there. Now we just have to see, like, as always, whether the market can kind of take the reins and run from here. Okay, that's all the time I have for today. As always, thanks for listening. And I'll be back again next week with another Cabot Weekly Review.